Okay, hello again. And so, what are these zones on the chart and why are they important to us? I don't know, they are almost magical, but they don't always work. But you never know if if you use them, it may help you. So, supply and demand. Okay, let's talk about supply and demand. In economics, what is supply and demand? Everything we see on the chart looks blue and red candles. We have blue and red candles. But what are these blue and red candles? We need to first understand how these candlesticks work. So for every candlestick, the typical candlestick is just made up of a body and then a top and a bottom wick. Okay, so this is a long wick here. So the red candles are representing bearish candles. In other words, the close is lower than the open. Okay. All right. So for every candle, there's an opening value. So where did the candle start drawing? When did it close? What was the maximum? The maximum value is a top wick. It's defined by the top wick. Then the minimum value is defined by the bottom wick. Okay, so I can actually draw this up somewhere for you if you want to really understand how a candle works. But maybe since that's not the focus of this video, I'll not waste time. I can do that for you if you want to understand how these candles are done. Okay, so the blue candles are bullish. That means that price is going up. They indicate an upward movement of an incremental value of price and incrementing price value of price, incrementing value of price. Okay, all right, it's a mouthful. It's too early in the morning. So let's look at this graph, chart here. It's like a graph, isn't it? A graph in which we're plotting price against time, price against time. So on TradingView, which I give to you as an assignment, if you actually pick the cross icon, you can actually get the value at any point on the chart. You can get a value or the price. Yeah, okay, the price on the right hand side. So there's a difference between value, price, and net worth, something like that. But that's not what we're talking about. All right, just look at price on the far right hand side, and then time on the bottom axis. Okay. All right. So what's an order block? Why order? The word order. Try to understand the word order. Order means we are asking for a certain, let's say you go into a pizza shop to buy pizza and then you place an order to buy pizza. But let's assume that you really wanted to sell pizza. Okay. So the buyer and the seller, for every buyer, there is this buyer, there's a seller that matches. Okay, then all right, great. So order block. Okay, so what is the order block? The order block is the same as these zones. Okay, so you can have a demand zone or supply zone. Okay, so you can see clearly that these are just terminologies people are coining up, but it seems these are very, very interesting zones where something, when you look at closely on the chart, there seems to be some repetition, a pattern on the chart. So if you look at it closely, let's go to a bit to the left-hand side and I'll show you example what I mean by something almost magical happening on the chart. I'm going to draw a rectangle. Okay, so if I pick a rectangle tool, look down here, clearly you can see that there's something like a place where price always comes there and as if it greets, it says hello, then it goes back. Like a shoreline. Okay, we want to call that a support zone or a demand zone. Okay, so the supports are on top, okay, and then the demand okay, downwards, okay, at the bottom. You can call them whatever you want to call them, but it seems that someone has actually done something at that place on that line. That price is always reacting to it. In other words, anytime price switches there, it's as if something is triggered. There's a trigger, okay, to buy. So in this case, every time price drops down to this level, it's there's a buy. It's as if there's a buy order. So that zone is an order block. So the word block is also synonymous. We can compare that to user in place of zone. So a zone, a block, a zone and a block. Okay, so I can use a rectangle to change the colors as I want on trading view. And I can see, you can identify a lot of places on the chart where this is happening. Price is respecting a particular zone. Here it's not very clear, but you can still see that if you take out the wick, there is some sort of respect. Okay, there's a respect being given to a certain area or zone. Are you okay? All right. So what we suspect is happening is that for every zone, if we extend this particular zone that I just drew, then it seems price historically it's always respecting some sort of order block or a zone, be it on top or below, be it support or resistance. Are you okay? So, like I said, we need to define what the support or resistance is, are you okay, or demand and supply is. Okay, so where there is demand, there will be the price is going to go up, and where there's a supply, price is going to go. So when there's a lot of um tomatoes on the market, the price goes down, isn't it? Okay. So there's a lot of supply. So that's supply. So price goes down where the supply is. Are you okay? So that's a supply zone and a demand zone. So think about it this way, but there's always one is on top, one is below. So you can call the top zone. Okay, so let's label this one. Let's make this one. Let's change the color to white. So the white block is a place where price moved up towards. Okay, because the so price increased. So if you look at the tomato analogy, then it means that there wasn't enough tomatoes in the market, isn't it? All right. So it's an area of demand. Ayaki, this demand, there's a need for Ayaki. All right. So I mean you can always mix the terms up, but they always mean the same thing. So price moves up towards the zone. But why are they important? They're important because then you can use them as your take profit, your TP, or your stop loss, SL. So if you set up an order, you place an order at the bottom zone, then you can always take profit at the top zone. Okay, so that's the idea. I think that's one of the most important things that these supply and then demand zones do for us. Okay, all right. So there we go. You placed your a buy order here at the bottom, and then you actually took profit right there at the top. Beautiful. And you could also do same if you had another block on top. So let me just copy and paste this. All right, so excuse me. So you have a copy of this drawn here. And you just took profits here and you wanted to enter a new trade. You could do that from this support. The support becomes the resistance becomes support. Okay, the support becomes resistance all the time. You having that happen because on the charts you always have price going up and down throughout the chart. You don't have price always going in a particular direction, like everyone will be rich. Okay, so that's why we have some losers and we have some winners. It's not based on luck. Of course, the fundamentals are what moves the price. It's what's happening in different countries and their currency, the strength of their currencies. That's the reason we are doing the currency pairs. Okay. All right. So exchange rate, all right. What is determining the exchange rate between the euro and then the dollar is what is moving the euro dollar USD, Euro USD currency pair. All right, so that is fundamental. So let's assume you knew that price was going to be bullish. Sometimes one single transaction can also change everything, and then everything will not make sense. But these order blocks are a nice and sane way to track what's where to do what. Are you okay? When to leave a trade or where to stay in the trade, for example. All right, so how do you draw an order block? You see me drawing them. I'm not doing it arbitrarily. I know what I'm doing, but we need to show you. So simple definition of an order block. Okay, so supply zone, demand zone. Simple definition is that an order block, okay, so be it bullish and a bullish order block or bearish order block, all right, is created, all right, from the last bearish or bullish candle from which we obtained a break of structure. Okay, this is more like a physics science definition, but of course it's not easy, isn't it? Yeah, so we are going to go by just that. Okay, definition, and I'm going to repeat again. So it's the last bearish or bullish candle from which we had a break of structure. Okay, so look at this structure here. So what is the structure? It's a market structure. This is how price is behaving, and you are thinking, oh, what's going on? Someone is playing a game. Okay. Then all of a sudden, price made a move out of this zone. All right. Now, show me which one is the last bearish candle, the last bearish candle. Okay, so I'm just going to draw an arrow to show you. I'm sure you probably figured it out, but the last bearish candle is this red, this small candle stick here, candlestick pattern. So there you go. Right, so you can see clearly that if I'm to draw the order block, then I'm going to just pick the top and then bottom of it. It doesn't have to be, it's not rocket science, but you just try as much as possible to draw a rectangle whose height takes the length, the height of the candlestick. You see the candlestick is very tall and you get a bigger one. But what you can do eventually is to refine the order block. You draw it like this, but price will always accurately come to the tip of it, maybe to the close. Okay, in the case of a bearish candle, or to the open, no, to the close, whether bearish or bullish candle. Okay, because the close for a bullish candle is on top, and then the close for a bearish candle is at the bottom. All right, so there you go. We are not trying to get rich. We are trying to understand how the market works. Because if you try to get rich, you will not be rich. Okay. Because it's not an easy thing to do, but you never know what's going to happen. So just try to understand some principles and see if you can make sense of it. Because this week we had, or in the past few days, Warren Buffett making a sale on Apple stocks, okay, and then that moved the market quite low. I mean, a lot of people were taken out, isn't it? So you do it, and of course, know that there's a risk involved with it. But then, so you have a calculated risk. You take a calculated risk. You don't just take a risk. All right, great. So that's our first order block, and I hope you understood it. It's a short video to explain how these things work. If you have questions, you can take a chart, draw a lot of them, reduce them. If it's too big, for example, if I'm to really draw this one accurately, this other block, this zone here, then initially it will be this big, okay? And I'm on the 4-hour chart, okay? So I can make it smaller by going into the 1-hour chart and then reducing it. You see that because that candle you see up there will be broken into about 4 parts in the 1-hour charts. So where is it? It's just gone. It's probably to the left hand side. See if we can find it. Should be in there somewhere. So yeah, can you imagine? 1-hour chart. Okay, let me go back to my 4-hour chart. It totally disappeared on the screen. So in the 4-hour chart, okay, so this is the example I was giving. All right. Okay. Yeah. So here, but when I drew it, then I went all over. Maybe I can just take off the automated auto. When you go on the auto mode, it fits data to the screen. Maybe that doesn't help. So let's just keep it like this without the auto. And then let me go to the 1-hour chart. Hopefully it will not move much. Okay, it still kind of jumps over the way. Okay. But I really want to use that example. So let me just keep scrolling. I've not signed up for an account, so I hope I can see as many candles as I can. Okay, there it is. This green zone is what we talk. I want to refine it. Okay, so I've already drawn this in the 4-hour chart, and I want to refine it. See how many small candles make up that large candle. It's not even that big, but we still have about 4 candles, so I can resize it. What it means is that you can find the value here and use it as a take profit or a stop loss to minimize your risk. So what is happening in these zones? Let me end by saying that the big institutions, the big banks, I don't say the big institutions, they are very rich institutions owned by very rich people. They have placed orders. They also understand, supply and demand, okay, and support and resistance ideas, okay. And so they have also placed orders at some of these areas. It's assumed. So anytime price, which is the triggers some of these buy orders and sell orders. And so that is why you want to trade along with them, and then you want to respect these zones because they seem to always come there, but it doesn't always. You see some of the wicks go a little beyond the zone. That tells you that there are times that they try to take out other retail traders who cannot understand this concept. Okay, who understand this concept, and so they want to take you out. So that is why it's important to do a stop loss. You always have to take some risk anyway. All right, so just keep practicing it and see it work some sort of magic for you, if there's anything like that. If I go to the far end of my chart, so here, where do you think price is going? Be the question. Which zone is this approaching? This is what is interesting. Okay, where is price going? We need to know. Okay, so let's go and see. Let's use as an example and see if we can figure out a zone in here. So where is are we having a break of structure in on this chart? This is a downwards slope, okay, down here. Okay, is there a structure that is breaking? Okay, definitely it is breaking some sort of structure. So the last block pair, visual inspection is this one here. Okay, so if we actually extended this all the way, then we'll assume that price is coming to it. That's as simple as that. But that's if you know what the market forces are leading to it. So there are a lot of other fundamental analysis that will confirm that this is where price is going to go. Now, there's a retesting, which is like a way of the big institutions taking you out of the market. So when price breaks structures, which is happening here, okay, I said I'm ending the video, but this is just a top up. All right, see how price can always come back and as if he's trying to deceive people who are like following what he's doing, the speakers teachers are doing to come down. And then let me use a better symbol here. Okay, so use a power symbol. It goes up, comes back and retests. Okay. Oh, that's not working. Let me draw it again. Should work. So price does that, and then does that. So those who don't have patience to wait would have gotten out, or they'll be taken out if you're also risk averse, then you might have gotten out before price actually continued in the same direction that you wanted it to. Okay, so you see me drawing these things and I shared some of them with you, then you know that that's the idea. Okay. Order block strategy. Okay. So you can think about how the market is playing out. Okay. Here down here you can see a rejection candle at the 1 hour time frame. So also let's understand the time frame. Different time frames will have different order blocks. Okay, but really the higher time frames control the lower time frames. You can do refinements as if okay, I want to be more accurate. So generally you plan your trade and then you look at what the possibilities are precisely on the lower time frames. Okay, so that'll be it. Enjoy your morning or day or wherever you watch this and keep practicing and don't try to get rich. As I always say, don't try to get rich quick. Okay, so let's keep reading, sharing. Bye bye. Okay, recorded, did I? I recorded.